Welcome back to another episode of Living and Investing with me, Jonathan Broekman. Today we are joined by Gary Bradfield, National Director of Phoenix Bonds. Gary, you're going to help us understand what your role is in a property transaction and give us some tips and ideas of what's happening.
Absolutely. Thanks very much for having me, Jonathan. Yeah, and I think quite topical. Interest rates have been the talk of the town for the last 3 years plus, and we were wondering when we're going to get some sort of a reprieve. Now that it's on the cards and started happening, I think it brings forth the subject of home loans, property again. People have been waiting and the time's come. So yeah, very interesting time an exciting time for the industry.
And so what would you read into being the changes that we might see in 2025 versus 2024?
So Jonathan, one of the single biggest things besides fundamentals, now fundamentals rule economy, etc., and decisions are made on fiduciary levels, but one of the most important drivers is in fact sentiment. So you might find in an economy where we have a 25 basis points increase in the interest rate, it may not necessarily be the case that you can't go out for a meal anymore, but it feels like you shouldn't. So it hasn't affected your budget to the extent that you can't, but you don't. And that is a typical and a good example of sentiment. When positive sentiment returns, as it is, we're finding across the board just altogether far greater buoyancy with consumers.
And is there a lag time? We know there's a discussion on interest rates coming down and the inflation figures right now. Is there a lag period after that it takes for the sentiment to filter through?
So, interestingly enough, it reported, and I attend various sort of forums and meetings, and I try and read as much as I can. The sentiment seemed to have presented itself quite rapidly. And it's practical things where we see that. So, for example, requesting of documents, whereas in the past it may have taken a while, we find now that potential purchasers are a lot more responsive. Documents are coming in quickly, they're accurate, so we're able to go to application stage a lot sooner than we were. So certainly I think in terms of incentive.
Sentiment.
In terms of what?
Sentiment,
that it definitely has improved and quite rapidly. So yeah.
In terms of somebody thinking or planning to go shopping for a house, what is the process they should follow in preparing for, one, getting a bond approved? Is there something they need to do to tidy up their credit history? And then two, how important is a pre-qualification?
Yeah, absolutely. Those are two really, really good questions. So unfortunately, a credit score and history is something difficult to repair quickly. So one is always encouraged to keep those in a good state of repair. And how do we do that? Very, very simple. Try to keep your facility granted against the actual balance of those facilities reasonably apart. So if you have a 10,000 Rand credit limit, don't use it as a target. Try and keep to within 30 to 50% of that actual limit. Pay what you need to pay on time, and you will find that your credit score improves over time and it stays sustainably good. In terms of pre-qualifications, probably the most important thing. So before shopping, pre-qualifications have just such a myriad of benefits, both to property practitioners, to the client, and then ultimately to the sellers. What a pre-qualification does, it's a very, very accurate account of what you're actually able to qualify for and what offer you're able to make on a property. So a pre-qualification seeks to understand your affordability, it seeks to understand your buying power, it seeks to understand your credit history, and it seeks to understand your income. And it does those and culminates in a certificate that when you go out and shop for a property and find one that you really love, when you make that offer, two things happen. One, if you negotiate out of a position of strength because you really have already got a home loan. Secondly, it does give the practitioner dealing with the property and the seller, as well as the seller, the peace of mind that the offer is actually worth the paper it's written. So it's hugely important. In terms of the pre-qualification, I would encourage to stay away from online pre-qualifications. Get a hold of a really good bond originator, and I'm not going to say Phoenix Bonds, but get hold of a really good bond originator, because they should be requesting the same documentation that they would for an application for the actual pre-qualification so that it's a job well done.
Banks weren't ever that keen on pre-qualifications because they weren't guaranteed to the business. How more keen are they right now? And why?
The pitfall with pre-qualifications is that they don't reach a bank's credit department. They are simply issued against the bank's preset criteria, and it therefore depends on the individual doing the pre-qualification. Jonathan, I think that the benefit to the bank of a pre-qualification, whether done through them or through a bond originator, is at least there's a greater assurance of a quality application reaching the credit analyst's desk.
We've seen with experience recently, some banks approve and others decline the same applicant for the same amount on the same property. How does that work? How does that happen?
Yeah, very interesting. And so the ultimate reason for that is internal conduct. That is not something that can be measured externally. So that is typically where a client of a specific bank perhaps went over his overdraft limit or had a returned debit order, etc. That is obviously a big no-no at the bank that he banks with. That's why you'll often find that for no apparent reason, no visible reason, this deal is declined at one bank, typically the client's bank, but approved at others. And that's typically why that happens.
So again, that points to the reason that we like every client to come through you to shop their details around to every single financial institution.
So, Jonathan, if you look at the statistic and the data, there is roughly almost 100 basis points, a whole percent difference between the highest and the lowest offers that we receive. So had a client limited their options by approaching only one bank or their own bank, they obviously limit and exclude the other offers they could have got. It's really important that they let us do the shopping around. We have really good networks within the banks and relationships with them, and we really do get things right that the client going directly would not get right.
And then everybody's favorite topic, have a private banker. Why would a client not go to their private banker and come to an originator instead?
I say this with the biggest respect. Private bankers are essentially an entry point to a bank. They facilitate the request or a need from a client, and they channel that request through to the relevant department. They don't specialize in any one discipline. So home loans, as we've seen over time, has become incredibly complex at times. A lot of intricate understanding needs to be held in order to be able to do this. So why we say approach a bond originator is because that's what we specialize in. All day, every day, and after hours, that's all that we do.
You stick to your lane.
We absolutely stick to your lane.
Can you walk us through a bond application from start to finish, from me introducing a client to you and saying, please phone them and sort this out?
Yeah, absolutely. So Jonathan, it starts with the understanding the needs of the client. So we need to make sure that we align what the expectation of a home loan is with what actually is available out there. Once we've understood the need, we go towards the collection of documentation. Phoenix Bonds, for example, you don't complete application forms. We really try to be easy to deal with, so we complete all documentation on your behalf. Once documentation is completed, and we then submit to the banks. At that point, it goes through a quality assurance process. So they test whether the documents supplied meet the minimum requirements of their policy and their criteria in terms of that home loans application. Once it's met that and passed that quality assurance test, goes through to a credit analyst. The credit analyst level would depend on the quantum of the home loan, the complexity of the home loan. So you would have complex self-employed deals, for example, going to a more experienced analyst. Typically what the analyst will look at is this loan affordable to our client? Does our client earn sufficient in order to qualify for this loan? Does his history from a credit perspective justify lending? And if the bank lent to them, would it be deemed to be responsible lending in terms of the National Credit Act? Once they have performed that process, they then issue what we call an approval in principle. And that's essentially a message from the bank to the client saying, we like what we see. We just need to check that you are actually employed where you said you are, and we'd like to just have a peek at the security being offered. So they issued with those two conditions in mind. They send a valuer out if necessary. They confirm employment. And once those two have been ticked, they then issue a final grant When the final grant comes back to us as originators, we store it until we've got them all in, and then we start a negotiation process, one bank off on the other, and ultimately the best offer is then presented to our client. Time frame for something like that, on a simple deal, anything from 1 to 3 days. If a valuation is going to be done, it increases to 3 to 5 working days.
We've seen that from practice.
Absolutely, absolutely.
Gary, I read recently that with those fires in America, that a lot of banks had cancelled the insurance policy, which needed to be renewed in January. Why would somebody in South Africa change banks on a bond, and does it happen?
So switching from one bank to another does actually happen. It's quite an emotional thing for the most part. It's a client who's been irritated or made very irate in terms of the service they received, lack of explanations as to why they couldn't do what they wanted to do. For example, wanted to access funding on their home loan, and out of frustration and out of principle, they switch that home loan to another bank. In terms of the actual insurance on a property, so in South Africa it's quite well safeguarded. You either insure through the bank, you don't have to do that. If you insure privately, then on your actual policy you need to note the interest of the bond holder, and if for any reason you cancel that policy, they inform the bank. If you don't produce a new schedule where the property has been insured, the bank will automatically load their own insurance, so that you aren't in a position where, like in America and sometimes just up the road from Port Elizabeth at Cape St. Francis, where a number of properties burnt down, the bulk of them were not insured.
Wow.
Yeah.
Gary, we've seen this happen in the past. What should a buyer not do after getting their bond approved?
They can plan furniture, they can plan revamp curtains, they just absolutely may not buy them. So that's said in jest. Jonathan, it's really important to note that the bank adjudicated an application at the time of presentation. If one's financial position changes after the fact due to one's own behavior, conduct, so in other words, you go and buy a vehicle, you go to Lewis stores and open up a installment sale agreement at 5,000 Rand a month. That was not accounted for in the original assessment that was done to determine if the home loan was affordable to you. So the bank will revisit that. They do an additional credit check prior to lodgement. So when attorneys request permission to lodge, the bank typically will do an additional credit check. If there's a variance which renders that loan unaffordable, they withdraw the loan.
So that's between date of approval and date of registration?
Correct.
Don't change your credit profile.
Don't change. You can change it for the good. Please don't spend anything.
Help me understand how the banks determine interest rates, and how can there be such a big variance?
Yeah, very good question as well. I'm going to use an analogy of life cover. So if Gary Bradfield from Phoenix Bonds went to attempt to get life cover, if he was lucky enough to get it, would be at a premium. And there's a reason for that, because he's a higher risk than someone who's within their weight category and who's nice and healthy. Equally, when you look at from a bank perspective at an application, they need, most importantly, the credit analyst needs to mitigate risk. So they need to look at what factors in fact mitigate risk on that application, and what in fact are circumstances that extenuate the risk. And it's the balance between those two that eventually an interest rate is arrived at. So if we use a simple example, if you purchase a property for 4 million and you bond the complete 4 million, that's the highest risk a bank can take. If you had to put R1 million deposit down, are you decreasing the bank's risk? Absolutely. They will pass that mitigation through to you in terms of interest rate. So it's a culmination of credit history, bearing in mind that your credit score is an absolute predictor. Credit scoring in the bank's world in terms of home loans is derived at the lessons they've learned over decades. They know what loans perform and what loans don't based on various things. And so they make sure that in the credit score, these elements are picked up, and they do an impact score. So when you present with a very good credit score, of course, you're presenting a great degree of predictability in terms of the performance of that loan to the bank. That's a positive. That mitigates risk. Your interest rate will drop.
And that varies from one bank to the next?
Typically very, very similar, but it does vary from one bank to the next. And ultimately, because clients don't often understand, but I spoke to a colleague who got prime less 1.8. I want prime less 1.8. It does depend on every single individual portfolio and the merits of each case. But highly negotiable if you use a good bond originator.
What are the single most important documents in making an application for a home loan?
Okay, perfect. So I'm going to go back to risk. A document which mitigates the bank's risk is an important document. So let's start at income. A document that proves what your income is. Very simple terms, a salary advice corresponding to a bank statement. Usually mitigating of risk because it gives the surety of income. Very important. In the case of a self-employed person, financial statements. What is the health of the business? What is the debt of the business? What's the assets versus liabilities? Very important document. Probably the most important document is your credit history, and that is your financial CV. It tells the banks what you do, when you do it, how much you do it, and it gives them a very good idea of how you would manage the debt with them should you get it, based on how you've managed other debt. And then, of course, proving who you are. There's a huge amount of fraud. We've literally seen home loan applications that are entirely 100% false, but look 100% real. I wouldn't be able to tell the difference, but the bank's forensics departments certainly can. So, every document that mitigates risk for a bank is a really important document. And keep your bank statements in a healthy state. Just remember to have those, that little 15 Rand debit order. Just provide for it. A return debit order is not it's not a welcome to a bank at all. Yeah.
Gary, $1 million question: when do you fix an interest rate?
If it's me, never. I'm not risk averse. It does depend how risk averse you are. But that aside, there's times that you obviously don't. Now, you obviously don't because we're in a downward cycle. Absolutely. If you have a really, really accurate, reliable crystal ball, you would be able to anticipate when rates are at their lowest. That would be a fantastic time to fix rates. Just remember, you take away all transactional ability away from your home loan the minute you fix it. So you can't retrieve funds off of your home loan, re-advance. There's very little it goes into a frozen state.
They cancel the access bond facility?
Absolutely. So It goes into a frozen state when you fix. So if you're really sure about what you need to do and you think rates are really close to bottoming out, fixing rates is a good option at that point.
Gary, the self-employed buyer, we know it is everybody's bug.
Yeah.
What do you need from a self-employed buyer as opposed to a salaried person?
So the essential difference is whereas a salaried person can approve their income through a salary advice and a corresponding bank statement, oftentimes a self-employed person cannot. And in the most simplest of terms, just as a self-employed applicant, remember the following. The banks triangulate income. There are 3 points to the triangle. The top point is the letter from your accountant, the letter of declaration of earnings. If your accountant's going to declare that you earn 50,000 Rand, that's the top point of the triangle. The next point of the triangle is the analyst will go and look at your financial statements. Now, he's going to say 12 times 50,000 is 600,000, and he's going to go to an income and expenditure statement and expect to see a line item called director's remuneration and an amount of 600,000. Then he starts to get mildly comfortable. The last thing he does in the last point of the triangle is he's going to go to your business bank statements, and he's going to want to evidence that 50,000 goes from business to personal account each month. All that I can say in preparation, the simplest is contact a really good bond originator to prepare thoroughly as a self-employed applicant. If not, make sure you're paying yourself the salary that you're going to be declaring to a bank, and make sure that it's provided for in the financial statements.
Remind me, you've given us stats before on what percentage of buyers are first-time buyers.
Percentage buyers, first-time buyers, we're looking at probably about 35 to 40%.
As big as that?
Correct. The age, I think, of first-time buyers has changed a lot. I remember, and I think a lot of us, dating back to when we bought, we were quite young. The first thing you did was try to secure a property. Now it's become something that you typically need to wait for. First-time buyers, nice for first-time buyers. There's a guaranteed discount on your bond registration fee from the bank panel attorneys. And the banks are also willing, if credit portfolios allow, to include anything from 5 to 10% extra on top of the purchase price for costs. Bear in mind, when you start to purchase in the upper end of the market, 4 to 5 million plus, Very few banks will include costs. Investec will. Banks like Nedbank may look at it, Standard Bank, but banks typically limit this to a maximum purchase price of 2.8 million. Over that, just make sure that we can get you costs, otherwise you would need to provide for them.
What does a first-time buyer need to do to submit a bond application? Anything in particular?
Everything is exactly the same. Interesting about a first-time buyer, if a couple or two people apply jointly for the home loan and one is a first-time buyer, that suffices. So one may have owned property before, but as long as one hasn't, it's first time. And of course, it's nice to be able to, if parties are married accordingly, and the dispensation is one of antenuptial, they can each purchase a property in time and benefit twice on the discounts on registration fees, the facility to be able to include costs, etc. as well. So that's nice.
In the situation where one of the buyers has a stable income and credit rating and the other one doesn't, how do you navigate that situation?
Okay. We truly hope in our scenarios that the one with the stable, reliable income and the good credit record is the predominant income earner. It's very contentious because we always depart from the point that we believe the bank should rely on, place focus on, the person who's most going to be responsible for the repayment of the loan and whose credit record represents one that shows predictability. We do have cases sometimes where partners are married and unfortunately in community of property, they both need to be present on the home loan and the purchase, and one there's detrimental information on the one, and sometimes it impacts it to the extent that the bank won't grant a home loan. Interestingly, as a bond originator, we do work up front to make sure what marital status is. Clients who are married community of property often say that they're married A and C because of that problem, and when it gets to the deeds office for registration, they pick up that it's a community of property marriage and the whole deal unfolds. So we do go to lengths to make sure that marital status is accurate.
Is important.
Yeah.
Lots of talk at the moment about banks merging, and there's two banks that are dominant right now. What do you see as the future going forward with banks, and is it going to affect the home loan business?
I think I almost want to say the home loans is almost a grudge product. A home loan, to be quite honest, is not a very profitable product in a bank's world. What is are the auxiliary products which support home loans, life cover, homeowners cover, bridging finance, and these sorts of things. Banks are loosely defined forced to offer home loans because it is a product that their clients, that consumers in the country have to have. From a profitability perspective, not the most profitable of the bank's stable of products. That's behind the scenes. Having been in the banking world, I can vouch for that fact.
Gary, we've had you on board as our mortgage originator for a couple of months now, and we are super happy. Remind me again, why do we use a mortgage originator and why Phoenix Bonds?
Thanks for the question, Jonathan. I think firstly, get in the mind of the enemy. I have to say that in the nicest possible way. I've been in the banking industry in this industry 21 years, 19 of which was in the home loan space in commercial banking. So incredibly important to understand from a bank perspective where their touch points are, where they derive comfort, etc. When you know that, you know how to present your applications effectively, you know how to very efficiently be able to satisfy that which a bank looks at. I think what we've strived to do right from the outset, which is usually important because I think the banks got it wrong, I worked there and that's why I say this, is that we were never easy to work with. A bank is incredibly difficult to work with. And at Phoenix Bonds, we've made that an absolute focal point, easy to do business with. We have digital platforms that you could do absolutely everything on. You do not complete a form at Phoenix Bonds. We complete the forms on your behalf, you vet and sign. So we've just made it really, really easy. Your typical application forms, anything from 8 to 12 pages, ours is 3. So we use experience, know-how, and an absolute passion for clients to get the job done very effectively and at a fantastic interest rate.
Gary, you know which deal I'm talking about. You recently pulled the rabbit out of the hat on one of mine. That was a pleasure, and the client himself confessed that he had waited a month with his own personal private banker preparing for the application and no progress. How would that happen?
Again, and I think it speaks to what we spoke of earlier, Jonathan, that's private bankers. And they have an absolute place in the bank, but home loans isn't it. And when you deal with a home loan of that quantum, and I think we're talking about sort of 12 million rand mark, you need to have an intricate understanding of how you present that transaction to a bank in order to absolutely illustrate how their risk would be mitigated. And that is something you learn over years and years and years. You get to understand financial statements, etc., to an extent that you're able to present that. And there's very few that cannot be done if enough work and the proper work's not put into it. No.
Looking forward, 2025, what do you think is going to change in that landscape?
I'm wildly on fire for 2025. Absolutely. I think the sentiment that we've seen in the first 3 weeks of January has been more than I saw in the entire 2024. We've started January on an absolute high. I've been absolutely busy, which is great, but it's been crazy. And I absolutely predict so. I'm more bullish than I think some of the commentators. So I do believe that we're going to find a slightly swifter reduction in interest rates. We don't know what the international scene will present and the challenges it does, but I certainly think that South Africans are ready to rid themselves of the doldrums of the last few years. I think we're at the point where let's get on with it, and I'm certainly seeing that.
Back to positive sentiment.
Absolutely.
2025, what advice would you give to somebody who's considering entering the property market?
Jonathan, I'd say two things. One, prepare yourself. And that is not only financially in terms of pre-qualification, understanding where you are financially, but also in terms of your homework on what you want to buy, where you want to buy. So research. And I think secondly, and probably most importantly, is partner with property practitioners that are specialists in their area, specialists in the field, know what they're doing. The information and the value that they can impart is just, it's irreplaceable and really important when you're looking to make an investment, whether it is just that or it's your family home. So I think your homes of distinctions come to mind.
Can a buyer get in touch with you direct without having negotiated the purchase of a house?
Oh, absolutely. And I would suggest that they potentially do, so that they know what they're doing. And they can reach us, our website, Phoenix Bonds. They can reach us on all the social media platforms. And of course, the nice thing about what we do, Jonathan, in terms of from the consumer perspective, is that there's no charge. We're mandated by South African banks by license in order to assist clients become ready to purchase properties and to provide them with a decision-ready representation of the client's financial situation. And so our service to clients, including a rehabilitation service, which will look to guide you from a potentially poor credit scenario to an acceptable one, readying you for the home loan process, is all free of charge.
And is there an expiry date on a pre-approval?
People like to say this is for 3 months, it's for 6 months. If my financial position changed tomorrow and my pre-approval was issued today, how can it be valid for 3 months? So I always say it is absolutely valid unless or until your financial position changes. Absolutely. So
easy answer.
Easy answer. Yeah.
Gary, I saw on your social media recently that you used a comparison between consumers in America versus in South Africa, that in America they would spend 20 times more on a house than on a car, but here it's 1 to 4. Is that correct?
Yeah. And it was an incredibly interesting stat for me. And you only think about it when you think about it. It doesn't really. It looks like we're a really bunch of motor enthusiasts in South Africa.
I was trying to work out, does that mean our houses are cheap and our cars are expensive? Which I think is the analogy.
I do think that holds a lot of weight. However, I do think that the motor vehicle payments absorb a lot of a typical family's budget, and it does limit what can be spent on a home loan. Absolutely. We seemingly like to drive nice cars in South Africa.
Gary, thank you. You've answered all those questions really competently and confidently. Thank you for joining us today, and looking forward to doing more business together.
Thank you for having me. It was fantastic, and all the very, very best for you, myself, and everybody else out there, Jonathan, for 2025.
2020 Thrive.
Absolutely.